In ASEAN, we think that there's this interesting mix of growth and inflation. So especially in ASEAN, differs from Northeast Asia, where in ASEAN you have fairly strong growth, but inflation is quite low. Inflation being low gives the central banks some space to cut rates, but given growth is still quite strong, there's no impetus for them to cut rates, which differs from Northeast Asia, where growth is softening, particularly in Korea, but inflation is still quite sticky, which means that we think the central bank is going to be on hold for quite a bit longer. We do think rate cuts are the next move in most of ASEAN and Korea, but we might have to wait till probably Q1 next year for any moves.
Most likely is Thailand, right?
For rate hikes, yes. We think that rate hikes, possibly the next meeting in a couple of weeks' time. We think BOT has clearly been quite hawkish given the rebound in tourism. We think that story is yet to play out on the tourism front. We think there's going to be quite a bit of pickup in tourism in Q4. And we think that possibly 2 more rate hikes from the Bank of Thailand. Near-term inflation might surprise to the downside, which gives them some space for a pause.
Are you concerned about positioning or playing the baht pairs considering the political turmoil, or are you trying to, perhaps, because obviously if we were to see any kind of significant political turmoil, it would send the baht into a spin. So are you keeping that in mind in terms of how you are playing it right now?
Right. Yeah, there is a lot of uncertainty right now with the elections and the prime minister candidate going on, which might go on for a little while longer. But the more important story for the baht is and has always been tourism. Well, except for the last couple of years, even when we were looking at the tourism rebound and when that might happen. We think that's happening. Finally, it's happening possibly in Q4. Beyond the soft season right now is monsoon in Thailand, but it typically picks up seasonally around the late Q3, early Q4 period. And we think now is a good time to be positioned for that rebound, given the softer dollar play as well near term. We also like rates and bonds in Thailand, so we are positioned on both. We have received rates in the front end on the expectation that inflation keeps remaining quite subdued near term in the lead up to Q4. And we like bonds because supply is quite limited near term, and with the political uncertainty, there might not be substantial fiscal stimulus coming in, which should support the bonds as well. So we like the 10-year point.